Speculation will ruin your trades. If you're watching this video, it means that you're actively trading and attempting to beat the market. And to achieve this, you must be thinking in terms of risk reward, not the price must go up or down from here, as if you control the market. Too many traders I see wreck themselves by believing that a price is predestined for certain coins when conditions are very clearly not conducive to a high probability trade. This line of thinking is counterintuitive, and you really need to view the price action objectively. In this video, I'm going to go over my logic for how I think about this and why I think that blindly buying every single dip is the most brain-dead thing that you can do. Before I begin, be sure to like, subscribe, maybe leave a little comment if you hate me for shitting on some of your favorite coins later. So there's many trading styles, but if you're watching this video, you're probably trying to figure out Brandon's system based on price action, relative strength, narrative, and identifying the most asymmetric setups. It's okay to deviate from his system and figure out what works for you. Some systems might have set and forget stops and targets, some might have discretionary cutting, sizing differences, more momentum focused, or more narrative driven trades. There's no one right or wrong way to trade, but from now I'm going to be framing things from the price action strength system and call out other approaches as negative EV based on the objective price action, unless you're experienced and have a proven edge here over many trades. I'm going to go over this tautology that I sent in the chat the other day that goes over my thinking for this. 1. If price is trending down across multiple timeframes, people are selling, not buying. You could argue that manipulators are buying lower to shake people out, but then that's speculation that a pump and dump will happen. Tell me, in your head, is it a higher probability that the horde mentality trend continues, or that someone is using an insane amount of capital to pump and dump manipulate a multi-billion-dollar asset? Play what you see, and if it's going down, it's just going down. If people are selling and not buying, the probability simply favors continuation down, not a reversal. In which case, it could favor a reversal, potentially even a blind one, but you could always just wait for the reaction first. Don't just speculate on the reversal needing to happen. Wait for it to actually happen either in the first few minutes with a sweep or just take the price action afterwards. Your job is to react, not speculate. Each failed bounce means that fewer buyers are stepping in. Therefore, your probability of a reversal shrinks the further that it falls. And if you average down while this happens, your size is going to grow as your probability shrinks, which is mathematically negative EV. This obviously doesn't include things like investments or trades with a higher time frame, but my words still apply here that you shouldn't speculate unless your thesis is solid and sound. In fundamentally backed markets like the S&P, companies are going to generate earnings and dividends where intrinsic value supports the eventual recovery of the stocks. Sometimes. In speculative assets like crypto, there isn't really this. There's only flows, narratives, a promise of buybacks, yield, but that would be more things that you want to kind of invest with speculatively, not really looking to base a trade off of. You're trying to make money and get out with trading. So even with the limited supply or valuations, the scarcity doesn't necessarily equal guaranteed demand. Coins might rise over decades with inflation or money flows and all of that, but not on a trading time frame. And if money does flow, you can catch it with relative strength in the market. So therefore, with all of this, crypto has no guarantee of recovery on a trading time frame. It doesn't always come back. And if you're averaging down, expecting it to come back, you're taking a coin flip and gambling on it, especially if you're unnecessarily oversized. Just ask the people who are getting fucked on over here. If someone argues that cycles must happen, that's a historical observation, not a law that has to happen. You're speculating on it happening. That's great. That can be your thesis. But is it going up right now? Is the rotation happening in this moment? How do you define it is happening in this moment with certainty? If you can't answer that clearly on all time frames, it's probably not happening yet. Claiming levels is a good start to this, but if it's not claiming levels, then it's not doing it. Buying bottoms blindly is relying on luck or for stronger players to come in and reverse the price. If you rely on luck or stronger buyers, you're speculating that it will happen, not trading with a mechanical edge. There are true bottom setups that exist at key supports where psychology might cluster bids and invalidation is clear. But without an invalidation, you don't have a trade, you only have hope. There are mechanical trades to take on low time frame key levels, but you need accuracy with these types of trades. So if you haven't backtested a system extensively, I don't think it's positive EV for you unless you know how to execute on it. You are not that guy, pal. If a breakout occurs with strength and volume, a trend is confirmed and flows and narrative will compound. And for those that are afraid of missing it, real rotations and breakouts will unfold over time. You'll have plenty of time to position once strength is clear. So compare this condition after a key breakout on this coin to conditions that followed the coin afterwards when it hit a very key level and rejected off of it. I won't name it, but some of you might know what it is. And this first condition over here really happened when it broke out of a super clear level and had continued strength with a narrative behind it and institutional inflows. That's the environment where taking trades makes sense because you're trading with the momentum. The second condition was when this narrative started to cool off and conditions started to get choppy and produced ranging price action. This is where things get really tricky because bottoms are no longer obvious with this. It turns into PvP on both sides. Let me demonstrate for you. Right? Okay, you think now when we're looking through this, maybe this is a bottom. It bounced. Okay, so now maybe this is a bottom because it bounced off of this level. No, it rejected off of this level. Okay, so now it's gonna hold this level, right? It doesn't even touch it. I don't get an entry yet. Oh man, I missed my entry. Maybe I take a breakout of this level. Where do I target? Do I target here? Do I target here? Maybe I'll target here back at the highs. Oh no. Oh man, I just lost the trade again. Okay, it didn't bounce off of this level, so maybe now it bounces off of this. So I think I'm gonna catch it and play this trade. I'm gonna take it back up to like here. Ah, it doesn't touch. I don't get my entry. Yes, it touched. I'm getting my entry. I think that now it bounces. Okay. I won this one. Nice, I won this one and I got a 1.21 R trade-off. If you had this chart and I ask you, is this really a bottom over here? What would you say with no other context? Are you taking a risk-defined trade based purely on technicals? And if so, how are you defining that level? Different systems will answer that differently. But the reality is that while you can always build counter arguments to justify your bias, the chart doesn't lie. It's PvP on high time frames. It's PvP on low time frames. It's topping. You can say that it might react here, it might react here or here, but in these conditions, you just shouldn't be sizing with Brandon's system, period. Maybe with some other system if you have conviction, but you should only take trades that you truly believe are positive EV. This means questioning your read on relative strength and weakness. Has the narrative you're speculating on played out? Maybe if the relative strength continues, but if you're not seeing it consistently, then it's simply not the time. When strength really comes back, it'll be obvious on the chart, and that's the time to position, not when you're speculating that the strength might come back. Speculation is the theme of this video. Every trade you take should start with the question, is this rooted in speculation or an actual edge? You can frame speculation as a thesis, but unless that thesis lines up with price action and relative strength, or your thesis is so strong of an edge, it's not worth taking. So take ETH for example. Its strength came from treasury flows, SBET, and clear institutional bid. It broke levels pretty cleanly, momentum carried it longer, and the edge was obvious. This isn't speculation, it's confirmed strength. You can catch it earlier by riding the strength before the narrative comes out publicly if it's showing strength and claiming levels. Now look at Sol. Currently, it does have some relative strength where it's like holding above 200, maybe even an institutional bid, and plenty of people calling for a rotation. This is not clear strength, it's mostly noise. You can bid these maybe with tight invalidations on a higher time frame, but a higher probability and safer move is if you just wait for real acceptance above a key level. Trading with Brandon's system is not about finding any old setup. It's about identifying the best one. If you're taking wide, drawn out trades with bad risk reward with weeks of chop, you're not trading anymore. You might as well buy spot and hope. Take for example this trade. If you're taking this with 20% of your portfolio, you're going to lose 20% of your port if you get invalidated and gain like 35% if you win. What if instead you waited for a clear setup above something like 220 and size in with the same target? You can get essentially the same return on your portfolio with only risking a fraction of what you originally would have done. So in this case, if you risked 10% at this point in time, then you would have gotten nearly a 50% port profit. You're exposing yourself less to the fluctuations in the market where you're kind of just biting your nails the entire way down. ENA is also another good case. It had some strength on the USDE narrative, but once that narrative started to die, so did the chart. It's actually had relative weakness since. Trying to hold it based off of the old story is speculation that it's going to come back. And if strength returns, it's better to trade it then. But until then, sitting it out is probably the better option. This applies to things like Chainlink as well. Narratives pushed it above 20 and even above 26.5. But even with the headline that the government is now going to put their data on chain, it retraced over the next few hours. You might hear that headline and think, wow, that's crazy bullish. But think about it one level deeper for a minute. Does it change any of the fundamentals of the coin? No. If people wanted a use case where they really relied on live economic data being on chain, they would have implemented it themselves already. The oracle can exist without the government. It's just faster, probably, with the government. Meaning, those use cases still have to be made if somebody had an idea. Also, this is just them literally publishing some number on the blockchain. Most finance use cases that even rely on speed would be doing so with Web 2 sources, which would probably be faster than any Web 3 chain right now. So rather than speculating that the coin will go up because surely these magical groundbreaking use cases will exist somewhere, you can wait for concrete evidence that a new use case is coming up and using Link heavily, and then ride the price action up when the time comes. It's not going to leave without you. This isn't just crypto. My dad bought Pfizer when the chart looked horrible back in early 2025, even though there was no narrative to it. He justified it with dividends, but that was just cope. Compare that with putting money into Nvidia instead, which had strength, momentum, and mindshare. Nvidia returned nearly like 43% in that same time frame, while Pfizer is down 7%. The difference is staggering. Knowing everything I just said, would you deliberately now go into a trade that is minus EV? Is your thesis truly strong enough to outweigh what the chart is telling you right now? Or are you just convincing yourself to gamble? Ask yourself if there's a better, higher probability trade out there, because there almost always is. The market is going to continue to give good opportunities. You don't need to force a trade out of speculation. Brandon's system is based on trading with clarity when the odds are undeniably favorable with an asymmetric trade. If you disagree with some of how he treats his trades, you should still take this away and integrate it into your own system. And yeah, that's pretty much all I have. Thanks for watching. I hope some of you found this helpful and maybe rewired the way that you think about this.